Hey, what's going on, guys? Welcome back to the Sat Show. In this video, I'm going to be talking about something a little different. I'm actually going to be covering cryptocurrency and Bitcoin and what I think about it as an investment. So to begin with, I do want to say that I've been closely watching and studying Bitcoin and the technology behind Bitcoin for about 2 years now. And I started investing into Bitcoin a couple months, about 8 to 9 months ago, when Bitcoin was around $4,000 to $6,000. That's when I first started adding to my position, even though I didn't have much capital back then. And a lot of people seem to think that Bitcoin is still a very speculative technology or currency, and they don't really understand the fundamentals behind it. However, I'm not gonna go super technical into this video, but I kind of want to show you guys a very simple analogy of how to understand Bitcoin and why it does have value, and why it's probably good that you allocate at least some part of your portfolio to Bitcoin. So first, let's clear up some rumors or what the general society actually looks at Bitcoin as. So a lot of people remember Bitcoin because it went from about, as you can see right here, $1,000, or even lower, like $300, $400, all the way to $20,000 in 2017. And people really remember the crash from $20,000 all the way down to about $3,000. However, if you do compare the return on investment from the lows, so when it was $200 all the way to $3,000, that's still a pretty large return on investment if you ignore the bubble that occurred. And a lot of people seem to think of crypto as a bad thing because they remember it crashing from $20,000 to $3,000. However, there is a reason why this bubble occurs, and the bubble repeats itself over time in history. And a lot of people have a hard time understanding that, but yeah, let me get into it. I do want to also add in the fact that right now Bitcoin is technically quote unquote crashing from $35,000 to $30,000. However, I do want to say that in the Bitcoin bull market, 30 to 40% corrections are pretty normal, and every so often you'll see Bitcoin pulling back to the 21-week EMA, which is right now currently I think around $20,000. So yeah, seeing these pullbacks are only to be looked at as a buying opportunity. So the best way that I can explain Bitcoin to people who don't really understand the technology is by using gold. So we know that gold has a fixed supply within the earth, and resources are used to mine gold. So essentially, when you mine gold over time, you're going to have to use more resources to mine the same amount of gold that you did 20 years ago, because now the supply inside the earth is less. Therefore, more resources will be required to collect the same amount, right? And over time, demand also goes up for gold. So essentially, it's giving the miners a lower selling pressure over time, since now they have less coming into flow and demand is going up. And this essentially gives value to gold, and it allows it to appreciate over time, since demand goes up and the supply coming into flow is lower. Now that you guys have a basic understanding of the reason why gold value goes up over time, now I'm going to be getting into relating Bitcoin and gold. So the first thing that's similar between both of them is there's fixed supplies. So there's a fixed supply of gold in the earth, and there's a fixed amount of Bitcoin on the blockchain ledger, which is at 21 million Bitcoin. So the second similarity between gold and Bitcoin is the mining and scarceness over time. So as I said before, it gets harder and harder to mine gold over time, since it is becoming more scarce and more supply was removed from the ground. Therefore, more resources are required to mine the same amount of gold right now as it did 100 years ago. And the way that Bitcoin is able to replicate this is by halvings and GPU mining. Essentially, you can think of it like this. Imagine that one block of Bitcoin is equal to 12.5 Bitcoins, and a certain number of calculations from the GPU is required to get this one block, aka electricity. However, after a certain number of Bitcoin is mined over time, the algorithm actually halves the amount of Bitcoin that is given to these miners. And therefore, one block of Bitcoin goes from 12.5 Bitcoin to 6.5 Bitcoin. However, it requires the same amount of GPU calculations, aka electricity, to mine the same amount. And this is essentially mimicking the stock to flow model of gold, how it gets more scarce over time and is having the selling pressure. So now, what does this result in, and how does it affect the price of Bitcoin or gold? So gold has been calculated or predicted over time using something called the stock to flow model, and you can do that exactly with Bitcoin as well. And here I pulled up a chart of the Bitcoin halving chart. So when Bitcoin was first created, one block was equal to 50 Bitcoin. And after the first halving, it was brought down to 25 Bitcoin. So essentially, the same amount of resources required to mine a block of Bitcoin halved. And as you can see, after the halving occurs, the price fluctuates and goes up a lot. So it went from like literally below $10 per share or per Bitcoin to now like $1,000 at the peak of the first halving. After that, the second halving, it went up to $20,000, and the next halving actually occurred in March 2021. And if you extend this chart, history is already written. However, it's not on this chart. But yeah, after the halving occurred in March 2020, Bitcoin price went up to now $33,000, and it is still going to continue going up. So in the middle of the summer, I was actually saying that Bitcoin would hit $20,000 by the end of December, and obviously it went to $30,000, so it did beat my price target. And this was because of something called the stock to flow model. And as I said, stock to flow models were used to predict the price of gold over time, and the same can be applied to Bitcoin since it is fundamentally very similar. It's just the internet version of gold. And after every halving, it goes up about an order of magnitude, and Bitcoin is theoretically supposed to hit $100,000 within the next 2 years, according to the stock to flow model. And I do think that it is going to hit that, since it's been used to predict the price of Bitcoin accurately in the past. So yeah, Bitcoin has these boom and bust cycles. So here's the first halving, and then after that it downtrends. And then when the halving occurs, like around 8 months after, another bubble occurs and it goes up, and these peak bubbles go up about an order of magnitude. So the peak bubble of the next cycle should be around $140,000, and it should then come down to a price of about $40,000. And when it does come down from its peak to its fair valuation, this is when people say, "Oh, Bitcoin's a scam. It's crashing. Oh, I told you it will crash." However, they're not seeing the fact that it literally went from $3,000 to $40,000 after the peak, which is still a huge return on investment, and people seem to ignore this fact. The proof of Bitcoin is written in the history of its chartings, and if you don't believe me, you can literally just search up Bitcoin halving chart and see how it performed after every single halving. And my calculations are showing 140,000 Bitcoin by the end of 2022, somewhere within that time frame, and it will come down to a fair valuation of $40,000 afterwards. And yeah, guys, it's fundamentally, Bitcoin is probably one of the most safest investments you can make. However, I do want to say I am not a financial advisor, and I do want you to do your own research before putting your money into this. However, the smart money is entering now, and even though you'll hear people saying, "Oh, Bitcoin's $10,000 above its peak. It's probably going to crash soon. Sell now, sell now." No, that is not the case, guys. Smart money is only entering now, since it is another halving. So we're far from the peak of Bitcoin, since it's just starting to occur. So that's all I wanted to give you guys. I wanted to give you guys kind of an idea of how Bitcoin works and kind of clear up the negative connotations around Bitcoin.